ensuing transition now, this will accelerate the need to actually transition the market. And really what I mean here specifically, Adam, is that we've got to move to a much more dynamic model. LNG traditionally has been very, very rigid. This is something I've been calling for many, many years, that look, if you look at where the market is, you'll see that more than a third of the market is already based on the short-term and spot market. Why are we overlooking that as a source of value? We shouldn't be. So from a financing viewpoint, there is an urgent need to factor these market developments into projects.
Hello and welcome to LNG TV and our latest episode of LNG Excellence. I'm Ali Vance and I'm here alongside Adam Spry, and today we are delighted to have with us Katan Hirachand. Katan is co-head of Energy Advisory and Project Finance for Société Générale. He's also a prize-winning PhD molecular scientist turned energy investment banker, project financier and trusted advisor to many of today's gas and LNG leaders. Most notably, he led the $15 billion debt raise for the landmark Mozambique LNG project. Katan, I hope that introduction did your CV justice. Thank you so much for joining us here today.
Thank you. Good morning to you all.
Welcome, Katan. The investment landscape has changed materially since the days of Mozambique LNG. How important is an adaptive approach regarding financing of new energy ventures moving forward? And in your view, are we likely to see an increase in the market embracing alternative approaches similar to reserve-based lending across the LNG markets?
Yeah, that's a very good question, and I think in the sector, what has really lacked is innovation in terms of the way projects are structured. And really, what I mean by that is we've had the pandemic situation. We've seen that cause an acceleration, of course, from a transition standpoint. But even prior to that, we were in a situation where the market was already becoming a lot more commoditized within LNG. With the ensuing transition now, this will accelerate the need to actually transition the market. And really what I mean here specifically, Adam, is that we've got to move to a much more dynamic model. LNG traditionally has been very, very rigid. This is something I've been calling for many, many years, that look, if you look at where the market is, you'll see that more than a third of the market is already based on the short-term and spot market. Why are we overlooking that as a source of value? We shouldn't be. So from a financing viewpoint, there is an urgent need to factor these market developments into projects. So you're talking about financial engineering, a bit of adaptation. There needs to be a bit of an evolution as far as this is concerned. But what I see is a very clear vision as to how we're going to achieve this, because it's, as we've said, it's already accelerated by the fact that we've got the energy transition, we've got concrete targets that have to be met. So what that will do is it will move us from this long-term model into something that is more medium-term in nature. And if we're still talking about similar metrics in terms of capital investment, then clearly something has to give, within the structure. So what I foresee is something that is much more dynamic, that does utilize other financing techniques. And when I talk about dynamic, it's basically saying we are going to give value to those contracts that are not necessarily long term. So maybe I should just pause there, but that's really the genesis of the idea we have in mind.
Yeah, because I was going to ask you, are there certain ventures that perhaps are more appealing to investors and lenders today? Because there's a lot of talk about dry powder in the industry and the capital markets in the investment world at the moment, but a bit of hesitancy to actually commit. But what are those ventures that are perhaps more attractive?
Yeah, that's a very good question. So I think you've got, ESG is obviously here to stay. Okay, so the way that projects mitigate that footprint, I think, is going to be very important in terms of their fit for purpose, going out 10, 15 years, whatever it is. Now, Clearly, we've had a real slowdown in the last year and a half in terms of projects moving forward, FIDs being taken. The last time we were in this situation, we had the usual kind of boom and bust cycle that we've seen in LNG, for many for many decades now. So what we will see in terms of attractive ventures are really the ones that take into account ESG requirements, and there's a whole slew of items that I can go through. But what I must say is that from a banking perspective, we're going to be very much here to support those developments. And this rides on the mantra of gas and LNG, obviously being a key part of the transition. So there's the transition in terms of moving to a medium-term model, and then the projects that the ones that are going to proceed, aside from the usual things about being low cost and low break-evens, are actually going to be the ones that actively address their emissions footprint, because lenders, you can regard lenders and buyers as being very similar in that regard. Okay, so buyers are going to want to have the ones with the lowest footprints, and lenders are going to be very, very similar in that regard. And actually, I would be saying to developers, take this issue very seriously from the outset, because it actually should lower your capital cost over time.
So those that build in and embed an angle of ESG is incredibly important. Those that maybe integrate and add on elements which are lower carbon, like maybe the next decades in the US and others around the world that are starting to integrate in their LNG plants, CCS plant. Are you seeing perhaps more interest to invest in smaller scale LNG ventures and LNG-to-Power, which carry potentially less risk? And likewise, as we move into a world, the emerging world of hydrogen, ammonia, is that also of interest and attractive to investors in the world, more so than we appreciate world-scale LNG plants that would carry more risk at the moment?
Yeah, so good points again. So smaller scale, definitely, because those projects are just easier to manage. Okay, having worked on something like Mozambique, where we've got a 20 billion plus project, the best part of $15 billion dollars of debt. These are very, very complicated and are are elephant projects. So small scaled, definitely much easier from all standpoints, from an engineering standpoint, from a market standpoint, from a financing standpoint. It's been that's been the case for many years. So yes, and I think the other thing that's changed, the market has become a little bit more bite-sized as well. So traditionally, where we saw a lot of the big Asian players committing to 4 or 5 million ton offtakes, Adam, that's not there today. People are much more interested in smaller parcel sizes. So it lends itself well to the smaller scale. In answer to your question around hydrogen, ammonia, etc., absolutely. There's really now an unrelenting focus in this area. I think what is lacking so far, and every country is different, it has to be said in this regard, but it really is about the regulatory model. And why I say that is, how is the project going to be supported from a revenue standpoint? So there are places in Europe, Germany, for example, that has now a global hydrogen program for the production of green hydrogen. They're putting incentives in place. They're utilizing things like CFDs to support those developments. The investors are there. The investors are ready, to do it. But until that kind of regulatory and contractual framework matures a little bit, it'll be very hard to understand what the risk profile of these projects are. So that's the bit that needs to catch up, as it were. But yeah, I don't see any shortage of interest. Every client I talk to today, as well as their existing, gas, LNG traditional business, they're also very, very keen to look at ways where they can liberate funds, to invest in these new areas as well. So as I've said, it's here with us. It's here with us to stay. And I think there'll be a lot of interest, from the investor markets, both equity and debt.
So many LNG players in the US have attracted some of the world's leading investment firms as investors, the likes of Blackstone, Brookfield, Stonepeak, and others. How important has this been to their success? And are we likely to see more multi-sector investors, infrastructure funds across gas and LNG moving forward, not only in the Americas, but worldwide?
So, we obviously deal in very, very large scale projects, a very big value chain from the upstream all the way through to consumption. A lot of that value chain is composed of infrastructure style assets. And for those infrastructure assets that are clearly linked to the energy sector, there has always been a lot of interest in people coming into those. These are very well maintained assets. They're long life assets. So the longevity combined with stability of cash flow is something that's clearly very, very attractive to that investor pool. So I think it's been very important in terms of actually allowing a lot of the developers to focus more on actually getting the projects, off the ground, focusing more on areas like, taking the commodity risk by way of example. And then actually it's really a risk layering approach. It's to say, okay, I might have these storage facilities, or I might have this pipeline. I can structure that on a standalone basis and effectively just have that as part of the infrastructure. Now, if I do it in that way on an availability based structure, that will clearly attract a much lower cost of capital. So I think it's a win-win, Adam, as far as the sector is concerned. Have they been instrumental in opening up new asset classes? Yes. I also feel now, though, there may be a bit of a tendency more to be keener on operating assets rather than greenfield assets, just because of the risk profiles involved. But are they going to continue to play a role? Absolutely. We've seen it in abundance in the US. We've seen it in places like Australia. We're starting to see it in parts of Asia, and we should be seeing it in Europe, Middle East, and Africa as well. And if you think about if you take the Middle East as an example, there are a few very, very well-known majors that have already undertaken monetization programs where they've effectively just said, look, we actually don't need the control or the funding of a pipeline, and we can effectively just hive that off to a group of investors. We're still going to use that piece of infrastructure. So that in itself is very, very attractive to the investor base that we're talking about. So yeah, in summary, it's definitely a model that I think will continue to be there. But I do sense there may be a slight preference for a lot of these players to actually look at operating assets rather than assets under development.
So both on the world scale side, things will advance as they have. If we look at one we mentioned a little while ago, Helios in Ghana, they've just made a nice investment for import regas plant that's doing incredibly well, is about to have first cargo. So those things will come on one stream, but obviously in terms of risk profiling, operating assets may be slightly more manageable, but there will still be a heightened level of interest from the investment world across the gas and LNG value chain.
Yes, absolutely. And again, let me go back to just the earlier theme. How we move this into a more medium-term investment model is going to be key for that, because that will be key for the proposition for these guys. It will be key for the proposition for the developer as well. And that's where I'm not just keen, I'm super excited to be able to sort of evolve, the industry, in that manner. There are techniques we can use. There are also stakeholders out there that are, quite interested in certain parts of the sort of risk spectrum. So I think it will just become a combination, of these factors as we move, to a shorter horizon in terms of the investment.
And how do you see the future, though? If you say you had a big investor, a sovereign wealth fund, they want to invest in LNG over the next 5 to 10 years, you're advising them. What advice do you give them with regards to opportunities, sectors and markets? What advice, where do you start?
Yeah, Ali, good question. There's clearly a country risk aspect, and I think everyone's different, in that regard. I don't see a shortage of opportunities, but some of them may be in more exotic postcodes. Let's put it that way. If we're looking at a lot of, if people are looking for safer havens from a country risk standpoint, then I think there's clearly a lot of scope in places like Asia, because you've got, again, you've got a wealth of operating history for some of these assets. And let's be clear, part of the driver here is going to be the monetization that those IOCs and those developers want to undertake. And so that we're all abundantly clear, they want to liberate capital. So that can be done with these operational assets. And flipping those out to these players, and then still having, an availability-based model. As I said earlier, that's going to be a win-win. So I think, Asia will clearly be a good place. US will continue to be, a strong haven for this kind of investment. You've already got so much, very well developed infrastructure, there. You can see it also in terms of branching out into other areas. CO2 infrastructure is, a good example where there it's obviously already a valuable commodity. You have tax incentives to invest, in that area as well. So those are amongst the areas that if I was, advising some of these SWFs, I'd be saying, these are well worth a look.
Thank you so much, Katan. It's been wonderful to have you on. Thank you for finding the time and to giving us a bit of an insight into your world. And good luck with some of those big projects that you're talking about.
Thank you very much.
Thank you very much, Katan. And also, thank you for joining us here for the latest episode of LNG Excellence. We look forward to you joining us again soon.